First of all, ladies and gentlemen, what is inflation, right? So inflation is a concept that most of us think as if it would be something normal, something that just happens. But at the end of the day, it's not true. It's a monetary tool to bankrupt you, to take your money, to silently keep you poor, and we're going to talk about that. If we, first of all, define what inflation is, we take time, we take price. This is inflation basically, right? So over time, your price is increasing. If this is 0, 1 year, 2 years, 3 years, 4 years, $1, $2, $3, $4, we say this is a bottle of water, okay? And this bottle of water at the end of the day, right? In the first year starts at $1, 2 years it's at $2, at 3 years it's at $3, in 4 years it's at $4. So that means every year price is increasing at around 100%, which now is a little bit over exaggerated, but at the end of the day, that's what inflation is, right? Why does inflation happen? Very easy. Number one, people say and educate when it comes to inflation that it comes from production cost increase, comes from wages, so tariffs, increase of wages, and then in general demand, right? So demand is another one. We could have import and export taxes, we could have many more things, right? But normally it's production cost, wages, and demand, or supply and demand in general. Means, for example, if demand increases, right? So if this is the price of the good, demand sharply increases, then price is gonna go up too, especially if the product is limited or the resource, right? If the product costs $1, but then wages increase, then obviously the bottle of water price is going to increase because we're increasing the cost. So what a company does, they take the cost, they divide it onto how many bottles they sell, and therefore price is going to increase. If production costs increase, obviously the same. So if the materials, let's say for a bottle of water, we need H2O, it is glass for the bottle, the packaging, okay, / packaging. It is many things, right? So if this increases, obviously price also increases. So let me show you what they actually don't teach you, right? So what they actually don't teach you is that, again, they say inflation, time, price is something completely normal. But we have a problem. The US inflation rate sits at 2.7 to 2.9 currently, okay? But with devaluation of the currency, so we don't only have inflation, we have many problems. So number one is we have inflation, we have devaluation of the currency, like for example the US dollar, right? And then we have taxes. So all these three monetary tools, regulations, laws, whatever you want to call them, they are basically here to rob your money. That's basically it, right? And they have many easy ways to explain you why it's not like that. Oh, inflation just happens. But look, you're gonna find out why inflation is a scam. If the government does not want to have inflation, but they benefit from it, so they will always not have it too high, sometimes higher, and they will never have it really low, because what they want is to control your money. Because what the government could do to stop inflation is very easy. And once you understand that, that's when I understood inflation is a man-made scam most of the times. Not always, but most of the times. They could have a price increase cap. If the government cares so much of the people, and especially having inflation in the most important goods that we as humans consume, like water, energy, food, right? Why not cap this? Why is there no price cap? That means over time, right, it cannot go further, and price can also not go further than this limit here, okay? So then there's no inflation. But why do they want inflation to happen? And more or less, you can count at around currently 10% inflation per year, more or less, okay? They say it's 2.7, 2.9. If you take all of the other factors into account, we as pro traders and investors, we count like with 10%. We say we need to beat 10% a year. That's why this gets important. Because the thing I want to show you now, so first of all, you see it's a complete scam because they could easily stop it. But the main reason why this is important to understand is that a normal dude that makes 2,000, like a normal NPC, a normal person, right? Sorry, a normal person, right? An NPC that makes $2,000 US, okay? Maybe has $1,000 of variable costs or fixed costs, okay? Fixed costs. Then another $500 variable costs. And then he's left with $500, which is already a too good of an example. Normally there's nothing really left, right? But let's say there's $500 left. This $500 is now stacked up for 12 months. We have $6,000. Okay, if this person now takes the 6,000 US dollars, 6,000, right? Takes the 6,000 US dollars and want to invest them, it's very hard to find something that makes over 10% a year, especially if you're not a trader and investor. And with this money, you are not accepted in hedge funds or asset management. Asset management hedge funds, they start at 30, 100 million or even more, where they achieve on average maybe 25% a year, right? And that is good. That is really good because you are beating inflation by 10%. 10% inflation, devaluation of the currency, right? We just spoke about it here. Devaluation of the currency, inflation, and on top of that, you have taxes, right? The thing is, because you make taxes on the profit. If you make profit on this, the 10%, right? You have 10% minus, you're making 25. So your grand total is 15%. And of this 15% in most westernized countries, or especially European countries, you pay about 25%. So 1/4 of that you have to give away again. So you're losing 10% more or less of your investment, and you're making 15%. 25 minus 10 is 15. On the 15%, you pay another 25% taxes, okay? And at the same time, the goods are increasing, right? So we are counting the 10%, we are counting into that the money that you make from investing, you will purchase something, a car, a house, goods, services, and these services are always increasing, right? This is time, this is price per pair, per whatever, right? Per house, per square meter. So when you come back after investing, for example, for 10 years, okay? Even if we only take for 10 years, and let's open a new page here so it doesn't get too messy. We have the 6,000, we lose about 10%, plus the 1/4 for taxes, okay? And then we're now gonna come back after 1 year, and this is 1 year, okay? So we have 6,000, and then we have made 25%, which is already pretty high to make 25%. Again, most ETFs and stuff like that, they make like 10, 15%. So if you make 10%, you're basically out of zero. You protected your money, right? The rats that come and eat your money, okay? So 25% we make, minus 10% we lose in inflation, and then 1/4 we pay to taxes, right? So 25 minus 10 is 15. So we have 15%. And then out of the 15%, you need to take into account that on the result, so this would be 6,000, 10% is 600 plus half of it. So you have $900 profit, right? If I'm not mistaken, okay? And out of the $900, you now have to take 1/4 for taxes. Let's say $200 we take off, right? So now 900, 1/4 is 600, 800 is 700, right? So now you come out with 700 per year, okay? That's what you have made to invest 6,000, right? 700. If there would be no inflation, no taxes, no nothing, it would be 6,000. So you see the difference, okay? 6,000 US dollars, 25%, right? So that means we have 10% is 600, 1,200, half of it is 1,500. Again, hope I'm not mistaken, but should be right, okay? 1,500 to 700, you see the difference. It's half of it. Half of it is eaten by taxes and inflation. So what this teaches us, at the end of the day, there's only one thing you can do, because the government won't do it. They won't put a price stop. They won't decrease taxes, right? And why they do it is the government, okay, and I hope, and this is not a theory or bullshit, government, it's 2 words in it, govern mind, governing the mind, right? Govern mind, okay? Mind, governing the mind. But they're not only governing your mind, they have to govern your money, because money equals power. If you have above average resources, then the most of the rules don't apply to you anymore in society, because most rules are implied and enforced by paying money. If we back in the times when we had no money broke any rule, we had to pay a lot of money. If you have a lot of money, you don't care about it anymore, right? So there's a big difference in understanding this to what they teach in the schools, where they say inflation is just something that happens, it's unfortunate, we are trying to control it. No, they don't give a shit. Because again, money is power. They don't want you to save money, they don't want you to invest money, or they want you to save money, because saving money is like you have 0%, but everyone should now understand that saving is complete bullshit. right? Because again, you're losing at about 10%. So guys, if you lose 10% more or less per year, in 10 years, that's 100%. In 10 years, you're losing 90%, 80%, 60%, whatever, of the value of your money. And don't get me wrong, investing will make you money. But if you put this money back into the economy, then most of these goods, the services, everything you want to buy, the price increases, right? And then you need to also remember, what are the goods that are mostly impacted by inflation? It's the normal goods that normal people need. It is food, it is energy, it is groceries, housing. This mostly comes from you need to go to your job. You have a job, you need a car to drive there. This is what they tax the most. Then you have foods and beverages or groceries in general, just everything you need for a house to have a normal hygienic life, right? And then housing. So these are the ones that are mostly impacted by inflation, okay? Obviously all the other things are also impacted, but these are the highest ones, right? And then you have luxury goods where you can put cigarettes and alcohol and all of these kind of things. And that's also what the normal society consumes a lot, which is the most heaviest taxed and inflated product that is basically out there, right? With your job, mostly you need to come back and spend money here, which again are the things that mostly increase. So that's basically how they scam you, because it's impossible for you to save money, right? So there's only two things you can do, okay? What can you do? Very easy. Number one, make more money. You need to make more money, and it cannot be from a job most of the times, because job wages grow like this, where inflation grows like this. So even if you get more salary, the increase of price is beating you, right? There's a big difference after 5 years, 10 years, 15 years. So even if your boss constantly keeps increasing and raising your income, inflation still beats your ass, right? So it makes no sense. So you need to make more money above average, and then second, you need to invest, right? You need to invest your money at a higher rate plus 10% a year. So again, I count as a trader investor, I always count out 10% a year. So if I, for example, make 50% on an investment, I always take 10% out, because with the money that I've put a year before, so if I invest 10K and I put this 10K in investment, it means it's gonna be gone in 1 year. It's gone for 1 year. It's locked somewhere. It's invested somewhere. It's making me percentages. By the time I take out the money after a year, I still lost 10% of my purchasing power. Because again, there's another thing we haven't been speaking about, and that's the currency that you put your money back into. Because if you buy stocks, you buy crypto, you're putting your money back into US dollar, okay? If this is the US dollar and you go into Statista, for example, and you put in value of US dollar, what you're gonna see is this. So if this is the value of the US dollar and this is time, then what you're gonna see is something like this. Right? So this is the value, this is the time. The dollar over the last, so since 1947, something like that, right? 1950. So if this is 1947, right? Until today, okay, we lost about 70% of its purchasing power, right? So if this is 1947, okay, and this is today, we lost at around 70%. And the crazy thing here is, guys, this is 70 years. So here's the point that I'm making. So in 70 years, we lost about 70%, or even more than that, I mistaken the numbers. So in 70 years, it was 70 years, we lost around 90% of the value. So that means this is a lifespan, like this is average lifespan, right? So let's say your grandpa, your grandma said, they started to make money, they said, we're gonna save money for the future, put money in the bank account, save, keep it at home, right? Or invest it into something that makes less amount of money than 10% per year. They're completely wrecked. That's what it means. They are completely wrecked. So investing or saving makes no sense if you don't make more than 10% a year. And that's why we go back to what I said. You need to make more money, or you need to make more than 10%. For that, most likely, you will need education in trading and investing. To sum it up again, guys, inflation is something that is man-made. It happens automatically, yes. It could be stopped. They don't stop it because it's something that they use to control you. It's a tool to keep you broke. Why would they want to see you rich? Why would they help you to make money, right? They don't educate us about money. They have monetary policies. Like, for example, as we just said, the inflation, the taxes, the devaluation of the currency, since they have taken away from the gold standard. Because what you need to understand is that back in the times, $1, right? 1 USD, okay? So $1 was a certain amount of gold. Then Nixon took away the gold standard, right? So what happened is that the value, which was fixed, basically just dropped to complete shit. That's basically it. So there is no connection. And these are the tools that they're using. So inflation, again, is not something that just happens. They could stop it, especially I would advocate to stop it for the society, for normal people that have a normal average income. They should not constantly pay the increase in food, in beverages, in energy, because that's what they need to live. That should be a normal thing, right? Everyone should have access to that at a good price. If you take Europe, for example, right, energy, because they completely mismanaged the energy future, right? The energy prices in Germany are going like this. If I sit in a restaurant in Germany, they have half of the lights off, right? They only put the lights on where people sit. It's insanely stupid, but it is what it is, because price is just too much. This is the time, this is how much energy costs, right? Same goes for oil prices going like this. Same goes for food, right? Food. Okay, back in the times I remember I went shopping with my mom in Germany. For a full bag, like a big bag of food, we paid 100 euro. If we do the same now, we are sitting at 220 euros. And that was 10 years ago. So that was about 10 years ago. That means more or less it's 120% price increase in 10 years. And that's what I said before. Some people say, no, but inflation is 2.9%. Yes, but it's inflation, it's taxes, it is devaluation of the currency. All of this plays a role. How do you want to beat this? I'll give you another one, which I don't understand. I mean, I understand it, but once I figured it out, I understood what kind of scam this is. Let's take the tax system. And I know this video is only about inflation, but then you understand it better. Tax system. You go work for $2,000 and you pay taxes, okay? Then you have the rest of the money, so let's say 1,500. And with the 1,500, you buy necessary goods, like again, groceries, foods, drinks, energy, okay? And then you have luxury, okay? You maybe like buy cigarettes, alcohol, weekends, party, blah, 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 right? And then let's say unnecessary stuff. Okay, sometimes you want to buy something, but I mean, everyone needs a phone and stuff nowadays, but let's say sometimes you buy unnecessary bullshit. And then maybe if you are smarter than 80% of the people, you're going to invest some money. So once you spend this 1,500, here you're going to pay taxes again, you're going to pay taxes again, you're going to pay taxes again, and you're going to pay taxes again. And at the same time, all of these things are increasing because they have inflation. Their prices are going up, but you keep making the same money. Maybe your boss is gracious to you, and now you make $2,200. But the thing is, your taxes increase progressively, okay, called progression. So now you still get 1,600. Congratulations, you have $100 more. But while you get $100 more in this time, inflation keeps rising everywhere, and basically your money goes to waste. Now, the thing is, what I'm trying to say is that if you now make it, which again, 80% of people don't, you achieve it to save $500 every month, which is nearly impossible with this wage for most people, right? Because they were never taught money management, they were never taught how to invest into trade, they were never taught risk management, they never were taught where to invest. And even if they invest, you need to find something that is plus 10% so inflation doesn't completely wreck you, okay? Because then you're basically coming out of zero and you will never see a growth in your portfolio, okay? So let's say you take this $500, you now saved and you invest them, okay? And let's say you make the 15%, minus 10%, so you make 5% per annum per year. So now you made 5%, congratulations, you beat inflation by 5% on your $500, that's crazy. So on a year, that's 10 times, you have 5,000 and then you have again $6,000, okay? So on $6,000, you made your 5%, 10% would be 600, so you made $300 in total, okay? $300 is your profit, which again, you pay taxes on. And I already explained it, but I want to re-explain it because you need to understand it. So you made money for working where you pay tax on to invest the money where then you pay tax on. And then you're gonna use this money to buy things where you pay tax on. Why is it taxed 4 times? It's taxed when you receive it, it's taxed if you make a profit, and it's taxed when you buy something, so 3 times. But you already paid tax on it. That's a complete scam. If you have paid money on taxes once, if you achieve to make more money with it, so you take it, you paid your tax, you invest it, and with this invested money, you buy something, you should not be paying taxes here because you already did. Now they say you tax the profit because you made money in the markets and we want part of this profit, okay? I can understand, but I still think it's complete scam. I think it's bullshit. So at the end of the day, this is a rigged game that you cannot win if you don't possess the 2 skill sets that I've been speaking about. And the 2 skill sets are making more money than the average and finding investments in good ways, or learning how to invest and trade and how to make more money than inflation that basically beats you. So with that being said, if you want more like these videos, put it in the comments, put the topics, we're gonna break them down here. I would love to hear your feedback, what you think about. I know it's a very aggressive thinking and maybe very contrarian and against the system. I'm not against the system, we need the system, but there's always gonna be people like you watching this that wants to break out of the system, and exactly for you this video exists, and for exactly you I made this video. So with that being said, make sure to like, follow and comment, and we see us in the next one.